so you can get a visual idea of what I'm talking about here. So if I go over here, let's just imagine in Excel that we had a prior period check, and it's going to decrease the checking account, let's say by $150, and the other side went into an expense account. And so there it is. So cash went down by $150, and then some kind of expense like telephone expense or whatever was hit down here. So now the net income went down because the expense went up. Net income has already been impacted. That expense, if we did our tax return, had already been deducted on the taxes, for example, or recorded on our financial statements for financial statements. So when I go into the next year, notice what happens to the income statement. It rolls in. This whole income statement rolls into the equity section. And then I start over with a fresh statement here. Let me see what I did here. This should be this one. So now we're in balance here, and we have nothing on the income statement. So what will happen then if I just delete the check? What's going to happen is I'm going to say, okay, well, let me void the check. If I just void the check, it's going to reverse that transaction, which is in essence like deleting the transaction, right? So let's keep it in the same format here. I'll just say and go, this will be negative of this and negative of that. So if I void it, the expense will go back down here, and this will be the cash. Now, that looks like kind of correct, but the fact is I already recorded this information on the tax return. So if I void it, what am I going to do? Am I going to adjust my prior period financial statements to reflect the fact that I didn't really have that expense? I don't want to do that, right? I've already issued those. I've already done the taxes. And now my retained earnings over here isn't going to be right because it's not going to tie out to the prior period's basically retained earnings, because I had actually finalized. I already finalized it before and reported that, right? So what I'm going to do is I'm going to undo that. And so what I'd like to do is record this in the current period. So in other words, I'd like to record this over here as a negative expense and the cash this way. So now what's happening is I'm adding it back in the current period, right? So now I didn't mess up my net income last year. My retained earnings still flows forward. This minus this matches my retained earnings, and I reversed it in the current period. Now there's a problem in terms of how exactly am I going to do that, like in QuickBooks, because if I void the check, it's going to void it in the period that I made the check, meaning it's going to void it on this time frame. So what I have to end up doing is something like this. I've got to say, okay, I want to see the audit trail and void the check. So how can I do that? Well, let's delete this for now, and I could say, okay, I'm gonna record the transaction with a journal entry again, basically, which is going to be an expense. And so then I'm going to say, I'm just going to mirror the same transaction. I'll record it with a journal entry. So it's in there 2 times as of the same date. And then, so I'm going to say this is going to be cash went down, and then it's in there twice. And then I'm going to void it so that QuickBooks sees it as a voided check, so I can track it as void, which is the way I would like to see it for an audit trail purposes. And that's going to be the reverse of this. I'm just going to keep the debits and credits in the same order I'm not going to put the debit on top. In other words, I'm just going to reverse it. And so now I'm going to void it. So now I'm going to say that happens in last year, right? So I'm going to say the expense now is going to be voided, taking us back to where it should be. Yeah. And then cash. So now these 3 transactions get us to the same point, right? And then I'm gonna make the journal entry for the voided check in the current period, which is basically like a deposit form, which will be recorded on this side. So that's going to be let's do the same thing, the expense and the cash, and the expense this time is going to be this and this. And then in the current period, we're going to say cash is, actually that's the wrong way, right? It should be the cash is going up. So I'm going to say this is going to be that and that. So now we have then the cash is at the 150 and the expense negative expense. Now that's pretty tedious to do, but let me just give an idea of why this is the case. We have the original check. We want to mark it off as void to give us the audit trail, but when I do that, it's going to take it back to the period last year, let's say, when I wrote it. So when I void it, these two are going to match out against each other, right? But I don't want to reverse it last year. I want to reverse it this year. So I'm going to put it back on the books and the current period. I'll make this one green so that I can still see it and it doesn't mess up my net income, so that I can then reverse it in the current year, which is what I really want to do. So by doing this, I get the nice audit trail, and I get the fact that it's actually voided in the system, and I get the fact that that the current period's affected, and I don't mess up the net income in the prior period. One other problem that we're going to have is that these two amounts, all these amounts, are going to be showing up on the bank reconciliation. And that means I should be able to match them out, right? This one will match out against that one, making it so it doesn't mess us up on the bank reconciliation. And this will match up against that one, so it doesn't mess us up on the bank reconciliation.